Hey everyone, Zach back with a new mortgage video. Hope you're all having a happy Tuesday. If this is your first time seeing one of my videos, welcome to my channel. If you're a returning viewer, welcome back, where I'll try to demystify all things mortgage related. If you find this content helpful, please like and subscribe. So today I wanted to follow up on my last long video where I talked about how in general a president can influence mortgage rates. Today, I wanted to follow that up by talking about specifically how the second Trump administration could impact mortgage rates. So if you haven't checked out my previous video, I would do so before watching this one. So first, let's talk about policy. Every single policy that Trump has proposed as he's been running for president is a policy that, if implemented, would be bad for mortgage rates because it's all inflation creating. Tariffs, tax cuts, mass deportations, those are all going to create a booming economy, increase the value of stocks, but in the long run, it will cause inflation if it's done the way he proposes it. Now, looking back at his first term as president, there were a lot of things that he proposed while campaigning that he didn't do, like building a wall. So I'd say everything outside of tax cuts, which I firmly believe he will do, should be taken with a grain of salt, but the things that he does successfully implement that will cause a stimulus to the economy will also cause inflation, especially since right now the economy, by all standard metrics, is doing quite well. The kind of measures that Trump is proposing and the type of stuff that would get the Federal Reserve, which I'll talk about in a second, to cut rates are when we're about to go into a recession, when there's crazy high unemployment, very few jobs, which is not the cycle we are at right now. The second piece of the puzzle is the Federal Reserve, and specifically the president appoints the Federal Reserve chair, which in this case is Jerome Powell, who Trump did appoint in 2018. That's important to know. Now, Trump, during his campaign, said he was going to asked Jerome Powell to step down immediately after he took over as president. At his press conference last week, when asked about that after the Fed made their 25-point rate cut, Jerome Powell was completely dismissive of that possibility, that he was adamantly not going to step down. And I believe mortgage rates rebounded as a result of that. I think when it comes to the bond market, which is treasury bonds, mortgage-backed securities, which kind of run concurrently, the independence of the Federal Reserve from the president, whose main focus is to do things that are popular, and of course creating massive stimulus would be popular, it would be bad in the long run. The markets, at least the bonds market, I think the stock market is operating under the assumption that more is better when it comes to tax cuts and things of that nature. But the bond market is concerned with inflation. So the Fed maintaining their independence from the presidency is going to be looked upon favorably, because then there's less of a fear that the president is going to cause inflation in the future. Now, it's important to know that the president can't just unilaterally elect the federal chair or any of the Fed board members, A, whenever they want, and B, without the approval of the Senate. During Trump's first campaign as a president, there were several members of the federal board. There's 7 members of the federal board, including the chair, and the president, once the terms are up, the president can appoint someone, but the Senate has to approve them. And in Trump's first term, there were 3 that he tried to appoint that got denied. And the common theme among those 3 is they were all kind of like Trump people, where they weren't necessarily as adamant about the independence of the Fed from the presidential office. The 3 that he did appoint, including Jerome Powell, are the opposite. 100% on board and focused on independence of the Federal Reserve from the presidency. So in 2026, Jerome Powell's term is up, so Trump can replace him, but I would not expect him to be able to get someone appointed who is just going to do whatever Trump says. And it's also important to remember that when the Fed makes these decisions, whether to cut rates or keep rates the same, or buy security bonds, all the decisions that they make, it's not just the chair of the Fed that makes those decisions. There's 6 other board members and there's 12 other presidents of regional banks. And those presidents of the banks are not elected by the president. They're elected by the board of each bank. So even if somehow Trump got someone in that was just going to do whatever he said, there are a lot of checks and balances and a lot of other people that he would need to find a way to replace before he could truly control what the Fed did. Now, just for the sake of argument, if Trump did get the Federal Reserve to a place where he could just kind of do whatever he wanted, let's say cut the federal funding rate to 0 for not a good reason, like just to stimulate the economy, even if we're not in a recession, facing a pandemic, which are the last 2 times the Fed cut rates to 0, that would be reacted to negatively, I promise, by the markets, because there would not be a good reason for it. And they know that that kind of stimulus, especially in a stable market, would cause crazy inflation, probably worse inflation than we've had even the past 2 or 3 years. Like I said, I don't think that's a likely outcome. But again, just in general, the role that Trump's presidency will have on mortgage rates really comes down to what he actually can get passed versus what he has talked about doing. Everything he has mentioned at some point, whether it's the tax cuts, tariffs, massive deportation, causing the rise of average wages, all of that would be inflationary. So getting rid of Jerome Powell just because he doesn't like his unwillingness to cut rates and replacing it, however unlikely, with a person who's just going to do what Trump says, that would be bad for mortgage rates. However, what he has said, just looking at his first term, he will do versus what he actually does is often pretty different. So as always, if you have any questions or comments, feel free to shoot them below or call, text, or email me if you need anything at all mortgage related. But thanks for tuning into this video, and I will see you next time.